Okay, in this video, I'm going to teach you how you can avoid the worst setups in trading and how many times this happened to you, because this used to happen to me all the time, where you take a trade in EURUSD, it's a loser, but the exact same setup in GBP/USD is a winner. Right? The reason it happens is because you're in the worst currency possible to be going long in, right? And in this video, I'm going to teach you exactly how you can avoid that and how exactly you can be in the best setups possible. Okay, so what do I mean when I say we're in the worst currency possible, right? We've got two currencies up here. We've got EURUSD and we've got GBP/USD. These are some very closely correlated pairs. These two are very, very closely correlated. And run the weekly chart here. And, don't worry. All you need to do is look at the weekly chart for this, right? All we're going to do is look at the weekly chart. So this is the weekly chart for EURUSD, right? Let's look at this low here. This is really important. This bearish move here. This is what EURUSD looks like. This is what GBP/USD looks like. You see the massive difference between it, right? GBP/USD, EURUSD. And I'm going to mark this out. We have something called a divergence. And what a divergence really is essentially telling you the euro is really weak and that GBP/USD in this case is really strong. Now, why does that matter? Why does that matter? Because I bet and I guarantee, because I was doing this all the time, because the euro is so weak, right, you only want to be looking for shorts, but you're probably longing in this, right? You're probably taking longs and looking to buy EURUSD as it's dropping. And remember, we're on the weekly chart. So look at all these massive, strong down close candles. Right, you're looking to buy in this, and this is why you're losing. And the exact same thing with GBP/USD, right? Look at GBP/USD. Look how it respects the order block here. Look how it respects the fair value gaps, and then it's shooting off. Right, we don't take out this low. We don't even take out this low. That tells us that GBP/USD is really bullish. Right, it tells us that it's bullish. So GBP/USD is really bullish. EURUSD is really bearish. Now, what does that mean for us as traders? What does that really mean? It means we're only going to look for shorts in EURUSD. Right, we're only going to look to short in EURUSD, and we're only going to look to long or buy inside GBP/USD. Right, that right there, if you just do what I just said, that will save you so much money, and that could probably make you a profitable trader. Because instantly, as soon as I did that, that made me profitable. Because I was in GBP/USD, and GBP/USD was very bearish, and EURUSD was very bullish. And I was looking to long inside GBP/USD, and I was losing. And all these gurus kept saying only trade one pair, only trade one pair. If I'd only trade GBP/USD, the exact same setup in EURUSD would work. And, I remained unprofitable for a long time because of that. And this is why I'm a big believer that you shouldn't be trading one pair. Right? If you trade one pair, you're going to narrow yourself. And, you're going to be in a setup like EURUSD where it's bearish. And you're just going to look for longs, right? Because it's going to be a long setup and you're going to take it. So I'm telling you, you want to have a few currencies. If you're a day trader or scalper, I would say, at least two, GBP/USD, EURUSD, maybe three. AUD/USD is quite good, or even gold if you wanted it. Don't just narrow yourself to one market, but just by looking at the weekly chart, we can see that GBP/USD is very bullish and that EURUSD is very bearish. Okay, so what do we do with that information? It means we're going to get the lower time frames, and we're only going to look to short EURUSD, and we're only going to look to buy GBP/USD. That's simple, and I'm going to show you some examples now. Okay, so we're on the 15-minute chart for EURUSD, and let me just tell you something, right? The entry pattern does not really matter. As long as you've got the direction right, and right here we're bearish, as long as you've got the direction right, everything else will be easy. Everything else will be easy. So don't obsess over, getting the perfect entry, the perfect this, the perfect that. You really don't need it. And I'm going to show you, a different example, because I know I always use a liquidity sweep and a fair value gap. There's a lot more like entry patterns that you can use, but we're on the 15-minute chart here. You can do the exact same thing on the 5-minute chart. And we've got an order block here, right? This candle right here is an order block. The last up close candle before this strong, decisive down move is our order block. And a tip for order blocks is that if you've got an order block attached to a fair value gap, that's higher probability, right? It's a higher probability setup. So we've got this order block here. Let me just mark it out. The order block being this bit here, right? And we're looking to short EURUSD, and we only want to do it at a key time of day. So this order block forms at 1 p.m. New York time. So this isn't a key time of day. But right here is around 2 a.m. This is our key, London Judah swing. And what I mean by that is that London always makes a fake move up, right? So this is a fake move up coming into the order block, and that can be our entry. That right there can be your high probability entry, right? Remember, on the higher time frames, we're just looking to short. We're just looking to short EURUSD. So put your stop loss at the order block or at the swing high here, and then you're going to target at least, let's say, 2 to 1, 3 to 1. And if you really wanted to, you can get a 5 to 1. Now, I'm not a big believer, and I say this a lot, in targeting a 5 to 1. For me, I would just take a 3 to 1. Nice and easy setup, right? Like that. Nice, easy, super high probability setup, right? It's all you really need. It's all you really need. We know we're bearish on the higher time frames. We're just looking to short, right? And smart money, they like the 15-minute chart for day trading. They like the 15-minute chart. And yeah, the 15-minute chart, very easy. You could have took this fair value gap too if you really wanted to, but the entry pattern does not matter. I'm going to show you the exact same setup This time I'm going to look for a long though in GBP USD. Okay, so here we are in GBP USD, and this time I'm on the 5-minute chart. Again, the entry pattern does not matter. As long as you've got the bias, the direction, everything will be fine. We know GBP USD by looking at the weekly chart is strong. We're looking to long. We're looking for any reason to get into this trade, and I'm just going to tell you about this price action here. So we're in the middle of New York, and this right here is your liquidity sweep. And I talk about this quite a lot, right? Ideally, I'd say most of the time, you want to wait for a liquidity sweep before you enter. And what is a liquidity sweep? A liquidity sweep is, let's say we're bullish, right? We know we're bullish and we're looking for longs. We've done all the hard work on the higher time frame. And because we're looking for longs, we want to see some sort of low where people would have their stop losses, like here. We want to see that taken out by like a wick, ideally. Quickly shoot off, retrace for us to enter, and then continue off, right? That's what we want to see. We want to see price wick down and take out some stop loss orders, quickly move off in the opposite direction, telling us that we actually are bullish, right? Because if price comes all the way down like that, that's not really bullish, is it? But because it's just poked down, just take out stop loss orders and then quickly reverse, that tells us that we're bullish. And ideally, it would leave fair value gaps like it's done there. And then we just enter the retracement and then continue price up, right? That's what we're looking for. Right here's your liquidity sweep. Nice and easy. So let's just mark this out. Liquidity sweep. Let's move this thing out of the way too. Liquidity sweep like that. And let's make it a bit horizontal. So here is your liquidity sweep. Now, like I'm going to say, the entry pattern does not matter. Fair value gap, optimal trade entry, order block, any of them will do. But right here is our order block, the last down close candle before the up move. Now you can say this is an order block too, but for me, I like the order block to have a fair value gap attached to it like this, right? Because that's a super high probability order block. If you're bullish, you've got liquidity sweep, you've got an order block, and you've got a fair value gap attached to it. Let me tell you something. That's a very, very high probability sell. And then for your trade, you enter at the order block here, right? So you enter like this, like that. Stop loss at the low of the order block, that's fine. If you really wanted to really be safe, it can be all the way here, liquidity sweep. Entirely up to you, right? Remember, obviously, the wider your stop loss, the higher the probability the trade will be of you winning, but you're going to give up risk reward, right? So let me just show you both examples here, right? So let me just show you this. Right here, you just about get a 2-to-1. You don't get a 3-to-1, right? But you've got a nice safe stop loss. But if you want, let's say, a higher risk reward ratio, you enter on your order block, stop loss at the low, you could target probably a 3-to-1. There you go, you get your 3-to-1. So, it's up to you. But if you have your stop loss here, you've got a higher probability that price can come like this, come down here, take out your stop loss, and then go off, right? It's quite unlikely that this would happen, but it is a possibility, right? It's a possibility. And like trading, it's just a trade-off. It's just a trade-off, right? The larger the stop loss, the lower the risk to reward, but the higher the probability. Simple as that. And yeah, I'm going to give you another example just by looking at the weekly chart. And we're going to quickly determine which one's bullish, which one's bearish. Okay, so we're on gold and we're also on silver, right? These are the two markets we want to look for. And this works best when you've got two really closely correlated pairs, right? So obviously GBP, USD, EURUSD, gold and silver, these two are very closely correlated. And AUD USD and NZD USD. Even GBP USD and GBP JPY, those two are quite good. But as long as it's correlated, as long as it's quite similar, that'll be fine, right? And you can also do, let's say, USD JPY with the dollar index, right? You can do those two because those two are quite similar. Let me just quickly show you what I actually mean by that, because that might confuse people. So, right, we're on USD JPY and look at the high here. Look at the high. See this high here? Now we're on the dollar index. The exact same high here. Let's mark this out, right? Put this here on the dollar index. And the reason we care about the dollar index is because the dollar index is the USD part, the USD JPY, right? For forex, you're trading two pairs against each other. You're trading the dollar and the yen against each other. And so run dollar yen here. This high here, because we haven't taken out this high, right, that we have here, because we haven't done it on dollar yen, that means we're very bearish. That means we want to look for shorts, right? And you can see all these dojis here on the weekly chart. See all these dojis here, these large wicks. It means price actually wants to go down, right? Whereas dollar wants to go up. Right, we can do the exact same analysis on dollar CAD, right? So look at this. Dollar CAD, we've taken out the high, right? Just like dollar. Right, just like dollar. That means we're very bullish on dollar CAD. We want to look for longs in dollar CAD. Whereas if we get dollar JPY up, right, very bearish. We haven't taken out the high. We're very bearish, right? So you want to look for shorts. But anyway, we're going to look at gold and we're going to look at silver and we're going to compare those two markets. Okay, so here we are on gold, right, on the weekly chart. We've got strong bullish move up, strong decisive candles up. And then we look at silver, consolidation, slightly bullish, very choppy, right? Gold, silver. What does that mean? What does that actually mean? It means gold right here is a lot more bullish than silver. A lot more bullish than silver. It means we don't want to be going long inside silver. We want to go short in silver because it's very weak, and we want to go long in gold. We want to buy gold because gold is bullish. That's how you actually trade, right? That's how you actually get into the best probability setup. You select the best and strongest currency, right? The strongest pair. And in this case, XAUUSD gold is the strongest pair on the weekly chart. And the reason we use weekly chart is because this is what smart money is actually looking at. And there's no messing around on the weekly chart. Everything that happens on the weekly chart is super important and super significant to price action. So on the weekly chart, strong, bullish, decisive. On silver, very choppy, very choppy. So we only want to look for shorts. We don't want to go long in silver, because if you go long in silver, what's going to happen, let's say this is the 5-minute chart, is that you're going to go long like this, right? Price going to come up, it's going to take out your stop loss. Even if you wait for a liquidity sweep, it'll still take out your stop loss. It'll chop around, and it'll just annoy you, right? It'll just annoy you. Or another thing that could happen is, let's say you get into your trade. How many times has this happened, right? Let's say you've got a liquidity sweep here, right? You wait for your liquidity sweep, price comes up, hits, let's say, a fair value gap here, and then just chops like that. Right, it doesn't hit your take profit, it doesn't hit your stop loss, it just chops for ages, for hours, literally hours. And this used to be me in the worst trade like this, right? GBP USD would be like this, or it would slowly come to my stop loss like that. Whereas Euro USD would do the complete opposite. The reason it's doing that is because silver on the higher time frames is bearish, right? It's bearish. The only reason it's going up is because gold's going up. And because gold's going up, it's going to drag silver up with it. But that's no reason to go long, right? You want to go short in silver, and you want to go long in gold, right? And if there's a bullish setup in silver and gold, avoid silver and only look at gold. And very quickly, I'm going to get on the lower time frames of gold and show you a setup. Okay, so here we are on gold. We know we're bullish. We know the higher time frame that gold wants to go up. We're going to look for any reason to get long. Any reason to get long, because we trust our higher time frame analysis. And we're on the 15-minute chart here. And like I always say, the entry pattern does not matter. And in this case, I'm going to give you my favorite entry pattern, which is the optimal trade entry. So you put your Fibonacci from the low to the high like this, and then you always enter on the 0.705 level here, right? Always enter on that level, and then you just enter like that, stop loss at the low, and then me personally, I always target a 3-to-1, right? Nice, easy, high probability, free risk reward ratio like that, and you get this trade in London, right? And the optimal trade entry is very good on the 15-minute chart, right? When you've got a market that's bullish, it quickly wants to move up. Optimal trade entries are amazing. They're amazing on the 15-minute chart. And they're amazing on the 4-hour chart, right? Right now, I'm a swing trader just because I'm so busy and stuff. So I use the 4-hour chart. An optimal trade entry can make you very profitable, right? You don't need any fancy entry. You don't need mitigation blocks, breaker blocks, any of that. You just need a simple entry pattern and the buyers, right? That's all you need. So here's your entry in London. And let's say you miss London, or let's say you don't trade London. You get another entry here, right? For New York, like that, right? Enter on 0.705 level, like this, right? Like that. Target your 3-to-1, like that. Nice and easy. Yeah, you hold on for a bit, a few hours, but it hits your take profit. Nice, easy, high probability sales, and that is literally all you need, right? It's all you need. You do all the hard work on the higher time frames just by looking at the weekly chart. So let's get back onto the weekly chart. Just by looking at the weekly chart, it should take you like no more than a minute to decide which pair is actually good to trade, right? So let's get the weekly chart up here. It should take you instantly. You should be able to look at these charts, right? Look at silver and say, that's nowhere near as bullish as gold. I only want to be in gold. Right, you should be able to instantly and quickly see it, right? So let's just do it on all the majors very quickly, right? So here we are in Euro USD. We can tell right away, super bearish. GBP USD, bullish, right? Didn't take out this low, we're bullish. AUD USD, bearish, but not as bearish as Euro USD. Why are we not as bearish as Euro USD? Because we haven't taken out this low here. Because we've not taken it out, we're not as bearish in AUD USD as we are. What does that mean? It means ideally we should just avoid AUD USD. Just avoid it, right? Because the best short will be in Euro, best long in GBP USD. Let's get on NZD USD. Again, NZD USD is just taking out this low here. Right, see this low is just about taking it out, but nowhere near as aggressive as Euro USD has, right? Euro USD is a lot more bearish than NZD USD, right? A lot more bearish. So we only want to be in Euro. And then let's get on Dollar CAD. Dollar CAD, super bullish. Super bullish is taking out this high. Dollar Swissy hasn't taken out this high at all, so let's mark that out. Hasn't taken out this high at all, so we don't want to go long in Dollar Swissy. We want to go short, right? Dollar CAD, we only want to look for longs. Look how aggressive, look how bullish it is, right? Almost no retracements, and this is on the weekly chart, so you just want to go long, long, long. And then let's get Dollar JPY. Again, Dollar JPY hasn't taken out the high. it's not as bullish, it's bearish. We want to look for shorts. That's simple, right? Get the weekly chart up, go through all the majors, and just see. Literally just look and see which one's the strongest and which one's the weakest. EURUSD is the weakest, look for shorts. GBP USD is the strongest, look for longs. That's simple. It's all you need. Literally all you need to be a profitable trader. Be in the best setups and make your life easy. Make your life easy, increase your win rate, and become a profitable trader. Just use the weekly chart to quickly filter out the bad setups and the good setups. And yeah, that's all you need to be a profitable trader. That's literally all you need. And if you want a full step-by-step guide, you don't want to keep, piecing together random bits of content, then I've got a course in the link in the description below. But other than that, please like, subscribe, and leave a comment for the algorithm. And I'll see you guys in the next video. Peace.